The S&P 500 inching higher Wednesday afternoon as Treasury yields dip below 1.5%. Let's get a read on the market action from our friend in Southern California, Ross Gerber, CEO of Gerber Kawasaki. Welcome back, Ross.
Thank you.
So, Ross, we got low volatility overall as we head into the summer months, but not when it comes to meme stocks. Today it's WWE, World Wrestling. Yesterday was Clover, and we started the week with AMC and GameStop reports today after the bell. So I'm just curious, what are you hearing from your clients, and what advice are you giving them?
Well, our clients have no interest in these meme stocks at all because obviously I have 28 years of experience in the market. I did .com, and this is a very similar period of time as .com, where many companies that don't have the fundamentals to match the valuations are trading like crazy. But for every winner, there's always a loser with these stocks because in the end, they're bad companies. And so we stay away from investments that we can't hold for the long term with any confidence.
You said compared to the .com craze, are you worried about any of taking that as a sign of froth in the market?
Well, it's also a byproduct, remember, of the government's policies of giving lots of money away. So a lot of the froth has been created by the actual government. And what ends these periods of time is the Federal Reserve. And that's really what we're watching. So this kind of froth, whether people are gambling on sports or on meme stocks, I don't see that as a big problem if the overall market is functioning correctly. But I do think there'll be a lot of broken-hearted investors once the Fed comes back to play, which might be sooner than people expect.
All right. Well, you talk about the Fed and the cash that it doled out or printed out. The Wall Street Journal is reporting that banks are awash in corporate deposits.
Yes.
And we also know, Ross, that consumers have a lot in savings, thanks partly to those stimulus checks the federal government rolled out. So what implications does this have for stocks, all this piles of money?
Well, I would argue what implications does this have for the economy, which ultimately leads to the implications for stocks, because we obviously investors are participating in the stock market. That's why we have high valuations today. But what really matters is that the consumer is in such a good place. They have a large amount of extra money to spend, and they are spending this money. And we now see that the savings level is at records. So it bodes very well for the economy, but it also, in my mind, means that the government has to be more restrained going forward with the future stimuluses that they're looking at, the spending bills. They're very excessive right now when you look at the well-being of the economy as a whole. So I would rather see the economy play itself out with all this cash out there than the government printing more cash, taxing more people, spending more money. I don't think that's necessary at all. So we'll see what happens.
And I want to ask you about Tesla. You're a longtime Tesla bull, as many of our fans know. And Ross, the stock's down another 0.5% today. It's trading at around getting close to that $600 mark, which means it's off more than 30% off that all-time high of around $900. So what do you read into what investors are saying about Tesla, and how are you positioning yourselves, or how should investors, do they take advantage of it? Do they hold off? What do they do?
Well, I mean, obviously, we're heavily invested in Tesla, so we're in a different position than somebody who might not have any investment in Tesla and maybe want to take a look at the stock for the first time. We believe any price under 600 is a good value for Tesla. So it's kind of right at that point. But a lot of the decline in Tesla is because of the various confusing decision-making of Elon recently with regard to Bitcoin and other factors that have nothing to do with Tesla. So in that aspect, it's an opportunity. On the other hand, some of this stuff is troubling, and it means that the risk level for Tesla has gone up, especially in a year where they need to focus on execution. But we were very unhappy to see Jerome Guillion leave Tesla, who really, in my mind, was like the COO of Tesla and really the genius behind the truck business. So we're very cautious on Tesla on the short term as much as we're long-term super bullish. So we've got a great event this week with the Plaid delivery event, and I'm very bullish on Tesla's numbers moving forward, but I'd like to see a little bit more stability in management.
And lastly, Ross, with the 10-year yield dipping below 1.5%, what are the implications of that for investors, and perhaps especially for people interested in tech?
Well, it's a little bit embarrassing after seeing all the inflation headlines that were very predisposed to being completely incorrect about the way inflation works in the modern economy. So the markets are saying inflation isn't going to be a long-term problem. That's really what it is. Now, granted, we still have the Fed buying lots of treasuries, and I think the truth of the matter is that interest rates can never go that much higher than they are today without causing a very severe recession. So there's going to be a lot of pressure against this happening. So the way our economy works today is very much like a drug addict. And so if we take the drug away, it's going to be a bad, withdrawal. And so I just think they're going to keep giving the economy drugs for maybe ever.
Ooh, hope it doesn't OD. We'll see.
Right, exactly. And I think that's the risk reward. As long as you only do a little bit of drugs, it's okay. So hopefully, we'll have some, discipline here.
Okay, see what happens with the CPI coming out this week and the Fed FOMC meeting next week. Thanks a lot, Ross. Our thanks to Ross Gerber of Gerber Kawasaki. I'm Fred Katayama in New York. This is Reuters.